I like that part too. It's like waking you up, huh? Hey, 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 hey! Right? If you listen to it, one of the things is life is great, life is grand, life is good, life is beautiful if you give it all you got. It's what you have to put in, and if you have what it takes. Yeah. So when I played that, does the video play for you? Because there's been upgrades and it's weird. It does play, right? But so anyways, maybe not on all browsers. Cool. But anyways, g'day, mate. Let me remind you that trading is risky and not appropriate for everyone. Past performance, good or bad, is not indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. Do you hear that Ford is going to release a $100,000 Ford truck? What? But it makes sense. There's some rich hillbillies, huh? I guess they are, Jeremy. I haven't actually priced out a Ford. I think it's a F450. 450. Anyways, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. ECN, if you want us to be. We're a fixed spread. If you wish us to be, we're a variable spread. If you wish us to be. In fact, what I suggest is you have 2 or 3 accounts. One for scalping, which you'd probably want a fixed spread. One for news trading, right? Which might be the same thing. Traditionally, I like a variable spread. So I usually like to go with a bar. If you don't like spreads and you just want to pay flat fees and stuff, then an ECN is what you want. You have all 3 choices of model. So mix and match is what you want. Do these sessions 7:30 in the morning, Monday through Friday, except this Friday, where I'll be doing trade non-farm payrolls live at FX Street for the 138th month in a row, which is getting pretty close to 12 years. I do all this, spend hours and hours and hours and hours and hours every week, and hours and hours and hours every month, and hours, you know, all that. I'm doing this because I want you to succeed. Oh, Ryan just checked. So we spend 3 hours and 40 minutes in the fundamentals course talking specifically about central banking. Cool. Well, you need to know this stuff. In my whole my humble opinion. Oh, including money. Yeah, I guess. I mean, you got to know that, right? I mean, there's so much involved. You need to know money creation and you know, like the Fed's doing this and the Fed's doing that. And if you don't understand, I don't understand. Yeah. So, anyways, so that's that. Cool. So, anyways, guys, I want you to win. I want you to succeed, and I want you to do this for years and years and years and years and years, even after I retire. Maybe once in a while we'll get together and we'll have a party somewhere, and you'll tell me about all the awesome things you're doing because Forex was able to fund your dreams. You know, I have a friend that hosts a conference, I think once a year. It's called Awesome Fest, and he just invites a whole bunch of awesome people from all different walks of life from all around the world, and they go to some tropical place and they actually interact with each other, sharing their awesomeness. Like, it's cool. So you might have an author talking about this and a doctor talking about that, and this, you know, this other, you know, a foreign exchange trader talking about this other thing. It's just really interesting. So why don't we do our awesome Forex Trader Fest? Forex Palooza. Are we here? There you go. Yeah. What we could do is hold it in the Caribbean and support their economy. All right. Let's get through this. Let's get going. RBA did what? See, too much time in college. I sound like a professor. What did the RBA do is what you would say in English. Or what did the RBA not do? Then it gets, see, I can ask the same question 3 times and get 3 different answers. Obviously. Yeah, rates on hold. Cool. Then what? Concerns continue around. Right, they are talking about the Aussie dollar not helping the economy recover, because remember, they're an exporting nation. They want a weak Aussie, but inevitably they get a strong Aussie just because of the other types of flows. So when the Aussie dollar is cheap, everything in Australia seems cheap relative to the currency valuations of other economies. But what happens is then what Australia has to offer is so important. Again, the 2 major exports of Australia, iron ore and coal. And it's not just coal, it's clean coal. So, I mean, it's coal that you can make steel with, right? I mean, but you can get that from Kentucky if you want, or China if you want. But if you want clean coal, which you would use for energy, not for steel, well, Australia's got fantastic stuff, right? So what ends up happening, oh, and by the way, the Shiraz, oh my God, the Shiraz from Australia, they have some beautiful wines in Australia that are quite, many of them are quite unique in their own way. The Shiraz can be like peppery, but you don't get that in other places, especially the old world. Right? For that, you'd need almost a Grenache, but Grenache is not peppery, it's just strong. So anyways, Australia's got stuff that people need. So eventually, the world goes to Australia and says, give me this and give me that. What they're doing is that they're taking the Aussie dollar, right? And they're giving foreign exchange. Here, right? Here's my American dollars. Give me your Australian dollars. Okay? So that's how that works. So they want a weak one because that'll increase demand, but then increase demand, right? Remember, that shifts the curve. It's not a shift along the curve. It's a shift of the curve. And that will increase the price. And therefore it will go up. So they're asking for it to be weaker than it is, right? But I don't know. I mean, that might be the market mechanism. So I think it won't go down unless they force it down. But they are talking about 2018, 2019 as being better. Ryan asks, isn't the Australian coal the best coal in the world? It's good. I don't know if it's the best, but it's considered clean coal or a high-grade coal. Okay? But the part that's interesting is that to create coal, you need organic matter, and then you need to sit on it with lots and lots of heat and lots of pressure for lots and lots of time. Right? Significant amount of pressure. I mean, weight. Usually a mountain. In fact, always a mountain. I don't think you could even have coal without a mountain. Right? So anyways, so if you go to, like I mentioned, Kentucky, what they do is they cut the top of the mountain off, and dig down. Bloop, 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 and they send, people down and they dig it up. And literally the top of the mountain is cut off. The other thing you could do is, you got your mountain and you drill down into the mountain and you dig down that way. In Australia, the mountains that used to be there that created the coal are gone. They went away. They got a better deal somewhere. So now, if you want coal, clean coal in Australia, you go like this. You take out a broom. You're like, oh, here's some coal. Bloop, bloop, bloop. You just shovel ready coal. It's like right there. Plunk. Oh, I struck coal. So I would imagine removing a mountain to access a coal deposit is a reasonable expense to the operation. Okay? So it's like, and it's good. You're like, oh, and this stuff's good. I mean, it's cool, right? Right. And therefore, because it's there, again, think of it. What if the entire Blue Ridge Mountain range, and I guess you'd call it like the Appalachian Range, right? Which goes from northern Georgia to, I think, almost Maine, the Appalachian Trail, right? That whole thing. Let's just say the whole thing's coal. Except all these, except 1,000 miles of mountains are sitting on top of it. Well, what if you had 1,000 miles of just coal, right? Easy to get to. You're going to dig it up, and it's going to be something that you sell. And because you can get to it fairly easy, especially relative to others, you're going to have it more readily available, right? So it's going to be a big part of your exports, and therefore it's going to be a big part of your GDP and all that kind of stuff. Yeah, it's sort of like Saudis and their oil. There's like, oh, wow, look, some oil, more oil. Ooh, we got so much oil. It ends up being like the only thing you do. But Australia has timber, they have beef, they have coal, they have gold, they have diamonds and rubies and other precious stones, they have wine, there's all kinds, I mean, right? I mean, yeah, and the Res obviously just said, so they have a lot of natural resources, right? Do they have significant amounts of oil? I don't think they do. I know they have nat gas, right? I know they have a huge deposit of nat gas. The dairy, sure. Pulp, I said timber, but yeah, so that'd be a derivative of timber. Dairy, yeah, but then dairy, maybe as a volume, dairy I don't think is significant to Australia, but as a percentage of GDP to New Zealand, dairy is huge, right? So I've already taught you guys this, but we haven't done it in a long time. You watch the Fonterra dairy price auction, which is every 2 weeks, and it moves the New Zealand dollar. Yeah, you watch global dairy prices and lactose prices, and it moves the New Zealand dollar. Because as a percentage of GDP, it's more important to New Zealand than it is to Australia. Now, Australia might produce 5 times more or even 10 times more dairy, but as a percentage of GDP, it's not as important. It's interesting stuff, right? Oh, is that right, Brendan? Yeah, oh yeah, that's right. I remember that. Yeah, cool. And apparently then you can go to Hong Kong and eat the cows there. Is this Kobe beef? Yeah. Kobe beef. 100%. Number 1. Give me some money. You massage this cow every day? Oh, yes. Number one cow. Give me some money. Kobe, you like? Yeah. Does it drink beer every day? Yeah. Yeah, best beer in the world. Definitely Kobe. Yeah, give me some money. Like, it kind of looks like an old worn out dairy cow. No, this one's special. Definitely Kobe. Yeah, I think it's sick. No. Definitely Kobe. Like, I don't know if the steak's worth $1,000. Really? Yeah. All right. All right. Foreign exchange. All right. Great. Let's get on with it. Life is great. Life is grand. Life is good. Gee whiz, we got to zoom in so much now. Still can't even see. Okay. So it comes down to, like, are you going to try to sell this or are you going to buy this? Okay. So let's revert. So we talked about, over the course of maybe the last, 7 trading days. Let me get out my drawing tool. Bullish. Uh-oh, range bound. Right? And if you recall, I got the book out. My book I wrote a million years ago showed the exact same pattern and said it should fall. How many people will remember that? Where I literally put the book to the screen, showed the chart, and the chart, so the book might be 8 years old, but the chart is probably 10 or 11 years old. And back then, I suggested this would go down, right? Okay. Cool. Thank goodness. Because that makes me look smart. And I love it when that happens. Because I'm an only child. And if I'm not surrounded by attention and admiration, I cry, throw a fit, and pee my pants. So I'm glad this worked out. So now what? Well, how do you want to treat? How do you want to treat this area? I know there's a lot of lines and Marina's freaking out. How do you want to treat that? Yeah, well, we don't know if it's going to go up. We have to assume it's not going to fall further. Sure, yeah, Marina. I can't take it! Clean up your charts! All right, so we got to put this in context now. I went through great painstaking detail to outline how to predict and trade a reversal before it happened. Okay, so we got all that going. And then we went through and with reasonable detail, meaning took out a book and did a speech. I mean, spent half an hour on it. Showed you how to predict the reversal after the reversal. So is it true that we predicted this bottom? And is it true that we predicted that top based on price action? And by predict, what I mean, because there is no crystal ball, right? But price action tells us sort of in this area, price action and I believe pivot points in combination of, so price action with support and resistance doesn't necessarily predict, it more like highlights the high probability. But that's kind of the same, isn't it? Well, Ryan, we got to be careful because that is October's M1. Okay? And we did that in September, so it looks more important than it really is. Oh, okay. Yeah, no, I know, but this is now October's M1, right? And so remember, when you're doing your calculations, you do period calculations, right? High, low, close. Okay, and that equals your CPP. Oh, divided by 3 equals your central pivot. But then the other things are based on that, and so inevitably you're going to highlight things like the low for the month and the high for the month, which would be those two numbers. Okay? So that calculation, so that's the L, right? That's the H. The close would have been pretty high, so the close is going to move the central up. Divide that by 3, and you'll get a new monthly. Yeah. So that's why very often you go back, you're like, oh, damn, look at last month, it was amazing. Like, well, so this is why I use two different, or not only, but I use two different pivot indicators. And you got to be careful which one you're using, because this one doesn't look backward at all. Right? These are weekly pivots, right? Or no, weekly, anyways, and these are monthly and stuff. And so this monthly is not backward looking. So anyways, I'll see if I can give a different example, because I have those dailies. Okay. By the way, that's a buy opportunity, right? I hope you know that. If you're a bull, of course. So these are weekly backward looking, right? But I can go to indicator list, and we could have a proper look and see how that changes things, if at all. Okay. So these are monthlies. And this is the bottom of August, not M1. Get rid of that. Okay. Okay. But so that's actually, yeah, that's August, right? So that's why it looks. So you take this month's M1, October's M1, and you go, oh snap, it was perfect. But it wasn't back then. It was something else back then. That's all I'm trying to say. Cool, but that might be a small detail that's important. If you don't see the opportunity, John, you're either not a bull or you're not a swing trader. It's a weekly swing long. That's straight out of the swing trading course. Yeah. If you're bear, then it doesn't matter to you. Then you don't see the long because you're not looking to buy, which is perfect. If you're not a weekly swing trader, then you don't see it either. So, but if you're a weekly swing trader, you look at it and like, yeah, you would have longed this yesterday. It didn't go anywhere, but it didn't fall either, and maybe because it's obviously a weekly swing trader long. Right, just by definition. You're just like, boom, that's it, done. A monthly swing, there isn't one yet. Not on this Aussie. Okay, let's go over here. Looks like last week we went long. Looks like I set it up on multiple time frames. It works on the 1 hour, but it looks like I did it on the 15-minute for you as well. Let's try. I have to zoom out a little bit. Never got the pullback. All right, never got the pullback. Well, you know, actually, my timing's off because I'm predicting the future. So why don't I just change this slightly? I'm suggesting it hits resistance and then falls and then it goes up. So instead of the M4, it went to R2, retraced, and I think that's still pretty valid. Now the target would be a little higher because the top was a little higher. 618 predicts a 1382. I mean, it didn't go there. Oh, look at that. There's a pivot. Oh, wow. So anyways, last week or Monday morning, if you did it then, you'd be saying, you'd be predicting over 125, but it didn't get beyond 125 and a half ish, not even that. So there might be some move. There might be one more move here, but you can see this isn't making you confident. Okay, the true line in the sand you have to be worried about. You know, there's this, and then there's obviously that. Okay, so if you're concerned, what you could say is, I'm a bull as long as we're above here. Okay. And you probably would be looking at this on a 1 hour chart or higher. On a 15-minute, you see this dipsy-do, but on a 4 hour, you don't. On a 4 hour, you have a bullish candle, right? And we'd be creating a wick on the next bullish candle, right? And you're not really worried about this. And on the smaller time frame, you could get things like but on a 4 hour, you don't see that. It's called fractal geometry. So a 4 hour trader is still going to pick off the 21, right? And remember, it's a moving target, right? So this is a touch of the 21. You see how it's not touching the 21? Oh, but it is touching the 21. If this falls further, it will touch the 21. You'll say, oh, it's touching the 21. Or if it goes up now, in 1 or 2 more candles, this will be pulled up and to the right, which will be touching that wick, and you'll say, oh, it touched the 21. You're looking at it now, and you're like, oh, it's not touching the 21. Yes, it is. You're like, no, look at it. It's clearly not touching the 21. Yes, it is. Look at it tomorrow. I'll guarantee you it will be touching the 21. Okay. So these guys here, they're happy if it comes down, hits the 21, goes up. There's a lot could happen in those 4 hours, and then the next candle is another 4 hours, and then the third. So in 12 hours from now, we'll probably be closer to this this target here if you're still a bull. On a 4 hour, are you bullish or bearish? Bull. Are you aggressive or conservative? A or C? See, I'm getting mixed answers, which means some of you are lucky in just guessing the right answer, but some of you are definitely not following the rules of engagement, which is huge. So if you said C, you're not following the rules of engagement. Okay? Price is above the 21, you're aggressive. That's it. That's why we use the 21. If you're not using the 21, then just delete it. Okay? See, I'll give you an example. Yeah, okay. You're below the 21, you're aggressively bearish. It pulls back. Okay? You know for sure it's going to fall and you're going to sell the retracement. Okay? Pulls back, it's below the 21. You know for sure it's going to fall. Uh-oh, it didn't. Doesn't matter. Can't cry about that. You were bearish, you were aggressive. There was no humming, no hawing, no group hugs, no master debating. You just knew that it was going to fall. In this case, it fell for a while, then stopped. But the thing is, you now had an uh-oh moment. It's informative. So now you're bearish and conservative. Okay? And this is a sell. Now, it didn't make a lot of money. It might have gone all the way down to here. You can see I've already highlighted it, so we must have talked about it. That if you sold here, okay, there are two places for to fail. One is the double bottom, and one is the Fibonacci retracement. Okay? But for a bull, you know that that's the entry. Look at the old support becoming resistance. Well, that's when the bulls get active. I'm talking about still being bearish here. You're bearish but conservative. Okay, great. At this point, you're not bear. You're not a bear. There's nothing bearish. It's over. You're not trading, in fact, unless you're a bull. And what do bulls do? Buy at the 21, right? Buy at the 21, buy at the 21, buy at the 21, and look, it's down here. You know there is a 158 million% chance this is going up, unless it doesn't. If it doesn't, you simply grow conservative. You're still a bull, but now you're cautious, looking for double tops and stuff. Okay? Were you looking for a double bottom here? Hell no. Were you looking for a double bottom here? Hell no. Were you looking for a double bottom here? Hell no. The fact that it didn't make a lower low is informative. You can change teams if you want. If you start trading bullish in here, your target, by the way, is the 200 EMA. 200 EMA is a target, not an entry. You don't start trading here, okay? But you can go up, 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 down, down, buy, 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 and use a stop loss in case the market changes direction. Now, usually it changes directions for a reason, like extreme pivot points, like psychological levels, and then, of course, economic or fundamental data. Okay? So quite a few of you typed in a C. And in my humble opinion, that's wrong. It might fall and collapse and you might be right, and you could come back and say, see, Wayne, you're wrong. I made money selling. Well, okay. Okay. Fine. You made money that time. You're not going to make money on the long run. If you keep selling in an uptrend, you're going to go out of business. Okay? Now, you might say, oh, well, Wayne, on the 15-minute. Well, dude, I'm not talking about the 15-minute. On the 15-minute, I already highlighted to you that there's a lower low, lower high scenario that a larger institutional trader doesn't even see. It doesn't exist. Vamoose, you son of a... That's a JC reference. I don't know. Is it dirt off your shoulder? I think it's dirt off your shoulder, isn't it? You got to get them pips off your shoulder, son. Because ladies are pimps too. Come on, dust those pips off your shoulder. I think he says that, doesn't he? Ladies are pimps too. Go on, brush your shoulders off. I'm like, I don't get. I have to look that up. I don't really. H to the Izzo. There you go. For shizzle my nizzle. Yeah. All right. So this is why I become very definitional. We're above the 21 on a 4-hour. I'm bullish. I'm aggressive, and that's that. If I fundamentally don't believe in it, I can cautiously trade up, looking for the down, looking for an early collapse, or I don't trade it at all. Peter says, I listen to odd music. You know, I listen to everything. Everything. Like, once in a while, I listen to Chick Corea. Does anyone know Chick Corea? And my wife one time said, you know what I feel like listening to? How about that Korean chick you listen to? Like, the Korean chick. Like, yeah, the piano player. Oh, yeah, nobody. So anyways, that's sort of like jazz, fusion, piano, like blee, 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 15,000 different time changes and key changes all in a minute. But anyway, so yeah, everything jazz, heavy metal, rap, hip hop, symphony. I have gone to operas by myself, stood in the back row, and cried. Yeah, get that dirt off your shoulders, son. That's beautiful. Yeah, yeah. I lived across the street from the opera house. Yeah. Yeah, no. Look, obviously I'm a confident man, right? I'm confident. Hey, man, I cry at operas. So, what are you going to do about it? Right? Does that make me weak? Around that same time in my life, I was walking down the street with some buddies, and I saw a man hit his girlfriend / wife, and he regretted that very quickly. And just right in the middle of the conversation, I turned around and let me say, I wasn't the one crying. Yeah. I'm like, whoa, yeah, whoa. And then I went right back into the conversation. Whatever. Karate man. Yeah, I wish. No, I just mentioned that me and my buddies were going to beat the crap out of him if he didn't apologize. Unfortunately, it probably was 100 times worse for her later, but what am I going to do? Can't solve her problems. All right. I did pull 2 unconscious people out of a burning car minutes, maybe seconds before it exploded. You know how hot it was? The inside of the car was on fire. The back half of the car was basically missing, but on fire. You know how hot it was when we were trying to get those doors open and pulling these people out? I remember because my heart stopped for a second. The car's on fire, flames in the car. It's so hot that people on the other side of the road that were just watching me pull people out could feel it. I don't even remember it. I remember it being hot, but I was being roasted. It was so hot, the headlights of the car to my left, the fire's to my right, the headlights to the left exploded from the heat. So I'm in the middle. It's hotter where I am, pulling 2 unconscious people through a window while 100 people watched. You know how many people helped me? 1. Everyone else stood there. I was the one that also called 911 before I even got to the car. People just stood. Maybe it's right. They just stood there. They watched me. They just stood there. Amazing, just absolutely amazing. They're just standing there in shock. How about that oil, huh? Yeah. No, but, it's like, is it these things that hold us back from, like, being successful as a currency trader? Really, like, seriously, is it like, do we go into a mental shock when you're on your own making decisions and there's so many variables and it gets so overwhelming? Do you freeze? Because I remember that's the only reason 100 people stood there watching me saving people's lives, because the other 100 people were just in shock. They're like, it's too overwhelming. So you have to control So I worked at NASA for 2 years, well, 2 summers as a college student. And I would go through training, stress training. And so I have gone through that. I know you can teach yourself that. Right? It's like not letting your children watch a scary movie when they're young. Their brains are not used to it, and they're like, wow, it's so overwhelming. So you can train yourself, but that's why you have to do things like go back through your charts. Go back and learn what you did right. Go back and do what you learned wrong. I actually tell you, write it down. What did you do right? What did you do wrong? It's stress training so that when you're in this situation again, your brain has been exposed to this situation and knows how to handle it. Just trading every time is a new experience. Every time you trade with just trading, new experience, you're not learning anything from it, or if you are, it's very little, versus someone that studies and practices, right? So that when you're in a firefight, you don't freak out or you don't freeze. Get out of the foxhole. I can't. Well, then you die, right? Yeah, you got to stay calm. You got to keep moving, right? So it's super supremely important that you not just keep a journal, but that you're reliving these charts, and while you're trading, you're doing specific things. So if you said you're trading like double tops and double bottoms, there are so many times that you're not trading. That means you're not making mistakes. You're not confusing your brain, or you're not teaching yourself how to slice every time you drive. You know, you go to the driving range and you hit a bad shot, 100 bad shots in a row. What did you just teach yourself? How to perfectly execute a flawed shot. You can slice it all the time, every time. Right? But when I do things like that, yeah, up, 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 down, buy, up, 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 down, down, buy, up, 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 down, down, buy. And then everyone's like, yeah, sell it. What the hell are you talking about? Right? So you need to put yourself in these situations. Print out your charts and say it. Can you imagine if you actually did that, where you're like, up, 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 down, you're saying it out loud? The reason I say it is it's important. Now you hear it. It's important. These stupid things are important. They're not stupid. Right? So Anthony says staying calm is what we're going to, and I have told you this, and it's probably in my book, I don't know, but I can tell you, and I'm not ashamed of it, when I began as a trader, I would place a trade and I would lose sound, and I don't even remember seeing color in those days because I was trading in the middle of the night too. So those memories are actually black and white memories, and I remember not having sound, and the reason for it is my heart was beating. I was nearly in shock. And I realized that protective mechanism is not going to help me at all. Imagine the stress and your stomach muscles. You guys have stomach problems from trading? Yeah, you're doing something wrong, right? What are you going to do to address that? And it's a lot of the times it's because you're not in control. Okay? So you should focus on being in control. Right? So, the 3 C's. You have control. You say, I only trade after a double top at obvious support, or I only trade at a double bottom at obvious, at support or resistance, right? Without obvious support and resistance, I don't trade. And without the reversal pattern, I don't trade. You are now in control. Those are your rules of engagement. That's that. That's the only thing that happens. So now the control gives you consistency. Okay? So now you only sell at double tops at resistance. You only buy at double bottoms at support. And then you follow on with things like the 1, 2, 3 pattern or a price action or the moving averages. But now you're doing all of that and you're measuring your success, right? You're measuring your success. You're measuring the number of pips. Let's say your average loss size versus the average win size, the percentage of wins, and all that kind of stuff. And so at the end of that, you can say, well, under those circumstances, 72.3% of the time, I'm profitable. Are you confident now? Are you confident? Right? Yes. So when I wrote that, I asked myself, well, how did I become confident? Because I'm good enough. I'm smart enough. Gosh darn it, people like me. No. I'm like, well, why do I take that trade? See, I had to go through this. I don't even know if you ask yourself these questions. Why am I confident? Well, 72.3% of the time I make money in this situation. Well, how do I know that? Oh, well, I track my statistics, and specifically this pattern. And I got to that high level, and then you can go back in your history. Well, I used to be more like a 60-40 on this. But I was a little late on the timing or a little early on the timing. or I didn't make much money because my stops are too big, or usually my stops are too close. So then I start measuring, well, instead of a 25 pip, what if it was a 40 pip stop? Oh, well, boom, my percentage goes up significantly. You see? And I mess with it, and I tweak it. And after a year of doing this, I'm like, I know where my stop's going to be. I know, yeah, so my worst case scenario is I lose 40 pips. And sometimes these trades hit 200. But if I just leave my stop there, I know I'm going to make at least 100 pips on average, sometimes a little more, sometimes a little less. And I'm only risking 40, and I know there's a 72% chance I won't lose money, but in fact make some money. So I'm gosh darn confident. Well, how did I get there? Oh, I was looking for it before it happened. Well, control. And then why do I have control? Well, because I was stressed and would lose sound, would lose color, would have stomach problems. I'd literally lean forward, which tightens your stomach, which pushes the muscles against your spinal cord, which creates a physiological electrical chemical energy response, which is a fight or flight thing. Now you're sweating, your eyes are wide, your heartbeat's going, and I'm like, oh my God, I'm like, it's like fighting a wildcat. I'm like, I can't feel like I'm out of control. I don't want the hype. I don't want the wide eyes. I don't want panic mode. So what am I going to do to reduce how tight my stomach is against my spinal cord? How do I remain calm? I'm just carrying out a plan. I'm just looking for double tops all day. How long does it take you to open your charts and identify places on your chart where a double top and a double bottom might take place? Doesn't take that long. It's not stressful. And the control leads to consistency. The consistency leads to confidence, and you're confident because most of the time you're profitable. And then, why don't you figure out another pattern? After 5 years, you might have 5 things that you look for, and when you see them, you know exactly how to trade, and sometimes it's 68%, sometimes it's 88%, but you make money. Sometimes it's not a lot, but it's the consistency. Because you don't know where it's going to go, that's not what you do. You control your entry, you control your risk, but how far the market takes your trade, well, that's up to other individuals to keep buying. If you're a bull, you need it to go up. Well, how does it go up? Other people buy. You understand? Talk to your doctor. Ask them about that. I lean forward hunch all the time. So back when I was a salesperson, I would push the contract forward, and the person in the chair would lean forward. Now it's time to look serious. What are you going to say to that person? First of all, they're not listening to you because they're thinking about, I hope, I need to look serious. I need to look serious now. I got a contract. And they're also thinking, well, if I sign this, my boss might yell at me. I might look stupid. I might regret this. I don't want to take that risk. What if I'm making a mistake? And meanwhile, you're talking about all your features and benefits. That's what a bad salesman does. Oh, well, there's more features. There's more features. There's more features. But what did I tell you last week about trading? It's an emotional decision. Once you make an emotional decision, then you justify it intellectually. So you can't sit there like, let me give you 9 other intellectual reasons why you should sign that contract. It's not an intellectual decision. So their stomachs are tight, pressing against their spinal cord, electrical chemical energy going to the brain. The brain says, oh my God, we're about to get attacked by a wildcat. I need to increase the heart rate, the blood flow, so the muscles are ready to fight. I got to get the eyes really big, and we got to get going. I don't know if we need to run or fight. This could be a death situation here. Red alert. And then you're telling them about the beat. So I would tell a story. Relax, bro. You're looking for double tops and double bottoms. You need to remind yourself that you're looking to buy in an uptrend. What does that look like? You need to remind yourself you want to sell in a downtrend. What does that look like? Make it easy. Start with your support resistance. Use your moving averages to classify these things. Okay? Is it an uptrend? If so, you only buy at support in that scenario. Where's the support? Right? So we have to look at this. We're at weekly support, just a shade under monthly support. We're at a 21 EMA on a daily. Can you sell this? Yeah, but someone on this chart would. So I'm thinking maybe, because we don't know, it can fall. Maybe it's falling to the 55, but I don't think that way. Do you want to sell a weekly support daily 21 at a roll reversal? No. But in the next 2 or 3 days, this should be going up. That would be a hypothesis. That would be like a plan. So you could say, well, by definition, you think you might be at support. Great. So on a smaller time frame, what are you going to look for to confirm? See, it might fall further down into here. Okay? This is why you need to confirm your support. So there's two plans really, right? It falls down there, in which you might want to buy. Doesn't mean you have to. But that's where you'd look for something like a double bottom, wouldn't it? And somewhere in here. One of those might work. And so you'll say, well, Wayne, the 21's below the 55, I should be selling. Yeah, if you have no strategy. Right? It's like joining the army, being taught how to kick down doors and shoot bad guys, and then go into a war zone. And there's no strategy. Nobody knows what doors to kick down, so you just simply start kicking down random doors. Not good. You kind of need a strategy. You need to know where the bad guys are. You need to know where your setups are. If it goes up, then it'll go up in one of those two places. Great. What are you going to confirm? How are you going to trade this? Well, you know when the 21 is above the 55 on the hourly chart, it will be technically bullish on the hourly chart. But what you've decided is, and we don't know if you're right, but what you've decided based on technical analysis is that the daily chart is still bullish. So now you want to wait for the hourly chart to be bullish too. It might take 3 days for this hourly chart to turn north. So, why, are you in a rush? You only have a week left of trading and then you're not allowed to trade anymore? That's it? Right? Well, there might be a meteor that hits the earth and it's all over. I'm like, yeah, no, you're waiting for it to turn bullish so you can buy it and make money. That's not too hard, right? You see? And that's how you do it. What if it falls further in all of this? Well, then you didn't take the risk of selling into a daily 21 weekly support. So some people might say, oh, well, I lost all this money because I didn't trade. No, just ask yourself, right? Do you sell in an uptrend? And if the answer is no, then don't. Now, you're right, this might be dropping down from the daily 21 to the daily 55, but that doesn't matter. In the scenarios which you are right, let's say this does turn north in the next 2 days, and you pull the trigger and buy at support off the daily 21, off the weekly S1. When you've observed a double bottom, higher high, higher low, 1, 2, 3 reversal at the monthly support pivot. Is there a chance that this goes from 50 to 55? I'd say it's probable. And you won. A profitable trade. But not that big of a deal if you think about it. Right? Take control, be consistent in your trading, and you'll be a confident trader because you're worth it. Not because you're good enough or smart enough or people like you, but because statistically you've proved it to yourself. Scientific methodology confidence. Thanks for being on my team, guys. Want to do it again tomorrow? I'm sorry we stuck just on trade planning and stuff, but you don't need me to go through every chart and say, look, buy at the 21 here, look over there, buy that 21. You should be able to do that yourself, right? So hopefully this is a deeper dive, and then we can go into the easy stuff tomorrow. Right? Identifying, going through 9 pairs showing you that this is an uptrend and that's a downtrend. Come on. Cool. So I'll see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. And thank you for being a client of TradersWay.com. We appreciate you. Cool. Maybe bring a friend tomorrow at Forex.Today, huh? Yeah, you're right, John. All right, take care, guys.